Good day everyone, and welcome to this short educational video for trading. You're listening to Cilinix FX Capital, and in this video we will talk about moving averages. So first I will tell you what moving averages are and exactly, then I'll tell you about the two types of moving averages, or the main two types, which are the simple moving average and the exponential moving average. I'll tell you what the differences are between those two, and I'll also tell you how to use them in trading. I have two ways how to use them. To give you an idea of what they can mean to you. Afterwards I'll also go into trading view, and I will show you how to put them on your charts, because moving averages are actually just lines you see on your chart which move with the price. So I'll go into trading view, show you how to use them, show you how to tweak them after I've explained to you what they are. So moving averages. A moving average is actually a line which shows on your chart, and that line is made up out of an average price of a currency pair in Forex, and it moves along with the time. Like with every candle you have a new data point, and the line moves along those data points. So that are moving averages, and then you have a simple moving average and the exponential moving average. If you don't know exactly what I'm talking about now, just wait until the trading view, everything will come together. So the simple moving average actually calculates the average of a price over a certain amount of periods, which you can you yourself can fill in, and it just takes the closing or the opening price of all those periods and divides them by the amount of periods. So then you get an average price, and that's a point, and then it does that for all these points, and that creates a line, and that is basically a simple moving average, also called a moving average, simply said. And then you also have the exponential moving average, and the exponential moving average does not only calculate the average price. No, it weighs more towards recent price action. So let's say a pair is going down, the simple moving average will just calculate the average, and the line will not probably not go down very much in the beginning, while the exponential moving average weighs more toward recent price action. So the EMA, which is an abbreviation for it, will probably go down more when price actually drops. But we'll learn more of that in the trading view. Then I'll tell you how to use them in trading. Most people use moving averages to actually see in what way the price is going. So if a moving average is going up, the price is trending upwards, and you're in an uptrend, most probably. Doesn't work all the time. And when the moving average is going down, you're in a downtrend. Then you can also use them in a crossover, so you can put more than one moving average on your chart, and you can actually change the periods on them, which we will get back to in a minute. So people say that when you have like two moving averages, one has a period of 200, the other one has a period of 100, and if the moving averages average 100 crosses over the 200 moving average, let's say it crosses over it upwards, you can use that as a signal that you should buy. And if the 100 moving average is passing under, so it moves down the 200 moving average, you can see that as a signal to sell. And then another way to use them is if you know support and resistance lines, moving averages can also be seen as those, but then moving. Welcome back everyone. Now we're in trading view. I grabbed a random pair, this time the British pound against the Australian dollar. This is a symbol. We're at the 4-hour chart. It's looking pretty clean. So I'll show you how to get them first. The moving average, the simple one and the exponential one, are both technical indicators, so you can find them here. Exponential is just EMA, moving average exponential, and the simple here is called moving average. Yep. Then you have those. So let's just see first how you can tweak them for yourself. This is just the color style. Let's make the EMA red and the MA a nice shade of blue. And here you can see at the inputs you can actually decide if you want which price you want it to calculate the average from. So do you want the open, the high, the low, or the close? Most people use the close, so we're going to use the close as well. Then it's for example, from this candle it takes this price at the close. That is what it means. And then the length is actually over how many periods it calculates the average. So now it calculates the average of the last 9 candles, the closing price of the last 9 candles, and the average is the point there. So the EMA, in general, an EMA is, or a moving average, is more reliable when the period is higher. So in this case, let's just, it was 9 I believe, let's make it 50. You can see it straightens out a little bit. And just to make things more clear, let's make this one 50 as well. Because as I said, the exponential one weighs more towards recent price action. So we can see that happening right here. Price is moving up, price drops down, and the simple moving average does not really go down at first, but the exponential one weighs more towards recent price action, and it actually drops down further. Then I'll also look at a support. So how to trade with them. Here you can actually see that the simple moving average and the exponential moving average both were used as some sort of support line, which you could have put a trade on. Here you can also see that that both again were used as a resistance. I should not say line, I should say zone, where you can actually place a sell order, and this would have been a pretty good trade. And here you can also see that they are both moving up, so the average of the prices is going up, so most probably it's an uptrend. Here you can see them going down both. You can see it's a downtrend. When they're moving sideways, the average price stays the same, so that would be a consolidation or a ranging market. So let's put another EMA on it, and let's make that one green so I can show you the crossover. And let's use input 28, and let's remove the simple moving average to show you the crossover. So let's say right here the lower period one crosses over the higher period one right here, so you could have seen this as a signal to buy. You would have bought here, and then with a decent stop loss, it should have been pretty big here, so it might have not been the best trade, but you could have actually rode the price up pretty well. So those are ways on how to use them, how to trade with them, what they are used for by a lot of other traders. Here you can see that the 28 was support as well. And yeah, with having said that, I hope to have taught you everything you need to know about these two moving averages. And if you have any questions, please make sure to ask them to me under this video, and I can make a new video, a more detailed one about it, or I can just answer them in the comment section. So this was the conclusion of this short educational video, and I hope to see you in the next one.